This type of revolutionary information has the potential to trigger a significant increase in Nvidia's stock price. This report has a lot riding on it. You've sent out a new letter. Let's begin with this. All I'm seeing are the estimations. Revenue increase of 112% and EPS growth of 125% are the estimated figures. It's simply incredible, almost a head-shaking experience. And you're among this company's biggest admirers. Can this business live up to these standards? Is it even going to surpass them? Are investors satisfied with simply meeting them? In the past, Nvidia was the engine powering Tesla's innovative technology. Until the business eventually created its own internal systems, these GPUs powered Tesla vehicles. These original Nvidia cards are now highly sought-after collectibles that sell for hefty prices on the illicit market. One specific model, for instance, is presently retailing for $119,000. Get yours now by clicking the link below, but don't delay. Stock is very limited. Meeting expectations isn't good enough, but based on all of our checks, I think this is going to be a game changer for Jensen Nvidia, the godfather of AI, since it's getting faster. Additionally, I believe that the street is demanding. Prove it, every quarter, as you mentioned. Nvidia is at the forefront of this revolution, which is only getting started. Because of what this means in terms of technology, I believe it to be the most significant profits of the year, and possibly of many years. I've been asking a number of people, does guidance or earnings matter more? Due to the high expectations, even if they meet or surpass their revenue and EPS targets, the guidance may not meet expectations. How is the stock affected by that? How does it affect the market, in your opinion? We recently returned from Asia, and everything we checked indicates that the street is still underestimating this acceleration. It's all about the guidance. Jensen is the only game in town at the moment. In my view, this enterprise need is only getting started when you consider what Nvidia is doing, particularly with the upcoming processors. Powell's Jackson Hole is undoubtedly crucial, but this Nvidia earnings report sets the tone for the rest of the year and potentially into 2025. Additionally, I anticipate that it will be a showstopper, so prepare the popcorn. This is what you stated every quarter. No, but this will be a showstopper, demonstrating the direction of the revolution, and I believe that the skeptics are still being disproved. What about the concerns, the gap in quality between their chips' iterations, the fact that some of their clients manufacture their own chips, and the apparent waning of interest in AI? Are none of those things a worry for you? Indeed, it is aiming for a 2 to 3 month delay. That seems like an asterisk to me. In other words, from the standpoint of demand, this is not making a difference. Take a look at what we've seen from the hyperscalers, Amazon, Google, and Microsoft, when discussing the hoopla surrounding artificial intelligence. Nadella discussed the application cases that Lisa Su, the Messi of AI, at AMD had pointed out. The second, third, and fourth derivatives are only now beginning to manifest themselves. Therefore, when I consider the work being done by the godfather Jensen Nvidia, we are discussing metamorphosis. Together with Apple and Microsoft, I estimate that this company will have a $4 trillion market capitalization in a year. You're altering his last name, by the way? Is that Jensen Nvidia? Is Jensen Huang no longer there? You simply made up your mind. You see, you're making choices. I'd like to return to your note. Your analysis indicates that every dollar spent on Nvidia chips kind of trickles down to the rest of the computer industry at a rate of $8 to $10. For some of these other stocks, what does that mean? It's not only about Nvidia, so that's the most crucial thing to keep in mind. The multiplier is at issue. The revolution, the trillions of dollars in capital expenditures, is the focus. The remainder of the tech industry is multiplied by 8 to 10 for every dollar spent on an Nvidia chip. For this reason, Nvidia's statements are crucial to the continuation of current bull market. You're claiming that there is a wide tailwind. Even with software, it's a rising tide that will lift everyone's boats. In light of this AI mania, software appears to be under pressure, or at lay. Okay, I understand that technology is your specialty, but you also consider the wider market. We will present a chart. This is the S&P equal weight and the Mag 7. The equal weight has been outperforming the Mag 7 since the beginning of this quarter. To what extent do these profits matter in relation to that Mag 7 trade? Our data team ran the calculations, indicating a 10% increase or decrease in estimated volume after profits. What impact does this study, in your opinion, have on the AI trade, the mega cap tech trade, etc.? This rally's tech giants are still going strong, and I believe it's only getting started. Take a look at Apple's recent actions regarding the release of the new iPhone. Nvidia will be at the forefront of the AI narrative, but it will also expand, and that is what we are witnessing at the moment with equal significance. It's the market's expansion. Ahead of a Fed cut, investors are shifting their funds to other assets, particularly cyclicals. Are you implying that some of those flows might be altered by this report? Yes, I believe it does, and as we approach year-end, I believe that technology will eventually drive the market higher from a large cap standpoint. And in my opinion, Mag 7 performs better. However, a lot of people have remained doubtful. The bears have gone into hibernation. For the past few years, they have been critical of big tech. However, when it comes to the numbers and this transformation, this is not a bubble moment of 1999, but rather a 1995 or nearly 1996 moment. Since tech has previously performed well, multiples should be able to do the same, or at the very least, they don't have to stay in their current positions or enter into a contract with a high multiple tech stock. Therefore, if rates decreased, they should at least feel better about the valuations. Indeed, it is correct. AI, in my opinion, has kept technology in a positive place, and Nvidia ought to support that. It isn't a difficult multiple either. Nvidia may be 28 times forward profits, which is not a high multiple for one of the world's most significant corporations. Therefore, I believe that if technology is doing well and the Fed cuts, the market as a whole can grow. Because the Fed doesn't feel compelled to move at a meeting, do we witness an orderly easing cycle? At the next meeting, do they go 25 basis points first, or do they go 50? Therefore, simply complete 50 this year. Perhaps continue next year. Do you think that's how it will be? This should be a benign cutting cycle that is beneficial for markets since, in my opinion, the likelihood of a soft landing is increasing. However, since the Fed missed the inflation turn due to data dependency, I believe it is crucial that they stop using it. Additionally, I believe that they are now missing the softness. But might it be that the lag isn't because they're now overly restrictive? They end up completing 50 or a few 50s, and we don't know how strong the lag impact of the higher rates could be. Is that feasible? I believe the Fed is likely lagging a bit because futures markets are indicating more than 2 cuts. There is a lot of suffering since, as we all know, the housing, durable goods, and auto sales are all in a recession. In fact, cutting more aggressively might make sense, at least from the standpoint of the market. Since you're interested in market cycles, where do you believe unemployment peaks? Will we reach 5? Do we surpass the 5% unemployment rate? Since many businesses are currently apprehensive due to the tight monetary policy and real rates, a lot of it has to do with how the Fed interacts with CEOs. They are hesitant to grow as a result. As a result, the job market itself somewhat depends on the Fed's actions. Indeed, it might. Things could turn terrible once the labor market starts to see an increase in unemployment. Josh, Nvidia will be here next week. You briefly discussed it previously in the show. To remind people, we're going to display a visual right here. We don't discuss